Bitcoin is trading at $92,200. It is the 25th of Feb. I just want to do a quick update here on the charts because things aren't looking too great, but unfortunately it could get worse. Let's just see what's going on over here. And if you watched my previous video, it's on my YouTube channel. You can go and look that up. Nothing has really changed. What we have is on the weekly chart, we have a bearish RSI divergence. Okay, we are in a bullish trend on Bitcoin. The bull market on Bitcoin started in January of 2023. So it's been a 2-year bull market. Price has pretty much gone up only from $16,000 to $108,000, and we are now potentially seeing signs of complete exhaustion. So if we turn this back into the weekly chart, you can see over here, this run up, it started here. Okay, in the beginning of January of 2023, actually, when we reclaimed over here, and we've just been in this bullish trend. We are still in a bullish trend, but if you see what's happening here, we have a bearish RSI divergence on the weekly chart. It is basically just running out of steam. This RSI divergence on the weekly, it also marked the top in the previous bull market cycle. We are now also at a point where we are 10 months after the last Bitcoin halving, and in previous cycles it can be anywhere from 12 to 18 months. So we are approaching a potential cycle top timing where 10 months after the halving, maybe this is the top. But again, we won't have that confirmation until we lose this 50-week moving average, which is currently at $74,000, in the same way that we lost it over here at $45,000 and over here at about $8,000 or $7,500. So unfortunately, the confirmation for Bitcoin really comes at below 74,000, which is still almost $20,000, 20% lower than from current prices. Because the tricky part is here that on this high time frame, we could drop to 74,000 and still continue higher again. So that is the part where it's difficult to call a complete cycle top, because it might not be the cycle top yet. But in the short term, it is looking more likely like we are still going to get more pain to the downside, because if Bitcoin here drops to about $70,000, we are looking at probably quite a bit lower on different altcoins, which makes it it makes it difficult for anyone who's holding altcoins. Meme coins are already way down. They will probably go even further down. And that's always the risk that you have with any of these new speculative things. In the previous cycles, it was ICOs, it was NFTs, now it's meme coins. All of these things really don't have any value. And while it's going up and while new money is flowing in, usually the result of insider manipulation and crime and all those kind of things, once that finally dries up, there's no value left. There's nothing left to support it. And those type of projects, the meme coins, the NFTs, they will drop 90 to 99%. And a lot of them will probably stay that way and never recover again. So, of course, be very careful with what you invest into and also how you manage your risk, especially with those high risk things. Now, Bitcoin is a different story to the meme coins and stuff like that. I mean, we are still trading at $92,000, which is still way, way up. Okay, and we could even, like I explained here, we could see it drop to 74, and if that holds as support, we could still potentially run back up higher, because if the cycle, like I said, ends up being a 18-month cycle for the top, that would mean until the end of the year, where we still have a chance to still run higher into Q4 of 2025. That would be the same as the 2017 cycle over here, which ran to the end of December 2017, which was 18 months after the halving. That is a possibility. But for now, the charts look kind of heavy. So if we zoom in to the daily chart over here, you can see what's happening very clearly as we are here below the 50-day moving average. It's very simple to see here what is happening. And at this point in time, as long as we're below this level, which is currently about 99,000, call it 99,000. As long as we're below 99,000, the direction it's leaning towards and the pressure it's leaning towards is to the downside, in my opinion. And you can see very clearly here is that this level that we're currently at, this 88 to 92,000, has been holding as a support basically since December. It's tested at 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th time. Now, unfortunately, in technical analysis or with price action, the more that price tests a level as support, the more likely it is to eventually break down below it. Because every time it tests it, it's basically just showing more and more selling pressure, the amount of money that's needed to keep buying this to prevent it from breaking down. Eventually, if we run out of buyers, sellers are going to step in, they're going to win, and we're going to see a breakdown. And the issue here is that there's basically nothing here in terms of previous support, except for this move here. This was the election in November. After the election, after Donald Trump won, we had a massive pump, and there's basically no historical support in this level, which means that if we break down below 88,000, I would expect it's probably pretty likely that we are going to only try and find support in the low 70,000s. So that's kind of where it's at. In the short term, we could maybe bounce a little bit more. We could bounce to 93, 94, 95, somewhere here first, as it tends to do, because there's a lot of people here also shorting at these lows at support. And previously here, every time someone did that and they got punished really badly, if they're shorting here, we get a squeeze, they get wrecked on leverage. But I do expect us to break down. I think it's likely that we're going to break down. It just doesn't look good at this point in time. If we're looking at Ethereum over here, if we look at this as a potential range, I don't know if it's going to be a range, but so far it's potentially that, which means that, look, we just got rejected here at the mid-range once again over here. We broke below it, rejected. And if you look at these previous lows, there's probably a bunch of liquidity. Ethereum has really performed badly. The cycle didn't even get to its previous highs, so we got a lot of stops here. And if this whole market drops and Bitcoin goes to 74,000, I think we're going lower. I don't know how low, but based on the range, if it sweeps these lows, it's going below $900, and that would be, flash crash, bear market. I don't know what you want to call it, but it's not impossible. And obviously, the lower it ends up going, the more likely that ends up becoming, right? For now, this has held as support on that wick, and we are still trading within the wick. If we lose the wick, well, then you have this level over here, and then you have these levels, and then it just becomes more and more likely that we get a massive drop or a wick. And that would be the point of maximum opportunity if we do get that, of course. If we go below 1,000, we sweep these lows from 2022 and we reclaim this level. That would probably be a very nice long setup for maybe in the long term, I don't know, the next 2, 3, 4 years, for potentially a run back up. That is not impossible. But for now, this is a possibility. And what that means is without any sort of FUD or, trying to say, the cycle top is in, nobody knows for sure. Okay, it's all about probabilities. But you have to factor in the possibility that this is possible. And even if it's a 1% or a 5 or a 10% chance, who knows? But in that 1% timeline where it does play out, you have to be sure that you don't get completely wiped out, which means you have to be able to handle the drawdown, right? You have to make sure that if you are trading with any sort of leverage, that if your liquidation level gets hit, that you're not getting wiped out, right? You're risking 1 or 2 or 5% of your trading account on a leverage trade, that you don't get wiped out. You have to make sure that you are not so overexposed that if there is a 60 or 70% drawdown, that you still have enough income to cover your living expenses, and that you have the long-term vision and belief to be able to hold this for 2 or 3, 4 years, if that is what you want to do. Also, you have to make the decision at some point. Do you get out? Do you not get out? Because obviously getting out at 2,400 versus getting out at like 1,200 makes a massive, massive difference. So I'm not saying with any sort of certainty that it is going down to below $1,000, but I am acknowledging the possibility that it could happen. I don't know what the percentage chance is, but for now, until we get back above at least this mid-range, this previous high over here, which is about 2,900, I'm leaning towards bearish. It's below the 50-day moving average. It's below the 50-week moving average. You can see if I change this to weekly, we're also below the 50-week moving average over here, which is simply just bearish. Look at the previous cycle, below the 50-week moving average, below the 50-day moving average. It's bearish territory, which favors the bear trend, which is lower highs and lower lows, which means the trend is pointing down until we get back above at least 2,900. And here the 50-week moving average is about 3,100. So really until we reclaim this 50-week moving average, the trend in the short and medium term is now bearish. We look at Solana. Solana is here bearish. We're at 136. You can see here below the 50-week moving average is officially bear market territory. You can see it over here in the previous cycle. Once we got a weekly close below the 50-week moving average, yeah, we had a bit of a snapback bounce here, but basically below the 50-week moving average, it went from 106 to 6. It dropped another 90% below this 50-week moving average. So if you drop another 90% over here, that's taking Solana all the way back to 20 bucks. Again, assuming it's the same scenario. I don't know if it is, but what if it is? Now, what we see here on Solana is another example of a range where from the high to the low in the previous cycle, we had this deviation over here below it where we spent all this time, bear market accumulation. We broke back in the range and we took out the highs perfectly. Deviation spiked above the highs, but as you can see, there's also a bearish RSI divergence here on the weekly, and that led to a drop to mid-range and even below the mid-range. So these bearish divergences are massive warning signs, especially on the weekly and the 3-day and even the daily chart, because look what happened. Solana is a good example. Solana is leading the pack, but I'll show you in a second. I've already showed you Bitcoin, which is still not down that much. That has a bear divergence. And there's a bunch of other coins that have these bearish RSI divergences. And I think most of the time, this is the outcome that happens. So we either get a pullback and then a continuation, but at least a pullback to reset that RSI divergence, or a complete trend reversal. So you can see over here also, I've circled these lows over here. I think that gets taken out at the very least, which is about 110, maybe 100 to 110. It was what I'd expect at the low end. But if the cycle is indeed over and everything goes way, way down, maybe we go all the way back to range lows, which is like 20, 30 bucks for Solana in the coming weeks and months. And again, Solana is interesting because it did very, very well, because it ended up being the chosen chain on which all these meme coins launched. Millions and millions of coins this cycle launched on Solana, which means people had to buy Solana to be able to launch the meme coins. Now that the meme coin thing is unraveling, especially with the news of the scams that happened with Melania coin and the Argentina coin and lots of other coins that were just purely basically fraud and scams to extract money from retail. Now that that's stopping, and now that the market isn't buying those coins anymore, isn't buying Solana, and Pump Fund isn't doing well anymore, and they're all selling their Solana, look what happens here. So keep this chart in mind. Now what I want to show you is the total chart. Now, if we look at the total chart over here, this is the total cryptocurrencies. It's the market cap of Bitcoin and all other altcoins combined. Look at the same setup. If you draw this range, okay, you take this high over here in the previous cycle and the low of the previous cycle over here, bearish RSI divergence. As you can see, this is a weekly chart. So the previous cycle topped with a bearish RSI divergence with a higher high over here, but a lower high on the RSI. As you can see over here, we have a similar situation as I just showed you on the Solana chart, where we have swept the highs, but this could be a complete deviation. Okay, it could end up being that we just swept these highs, but now we're back in the range. We have a bearish RSI divergence on the weekly, and now that we are in the range, keep in mind Solana is already middle of the range. If this is a range setup and this RSI divergence plays out, and the whole of the crypto market cap goes lower, and we lose the 50-week moving average in the same way that we did the previous cycle, then we're looking at 30 to 50% lower in the whole crypto markets. And that's then assuming that this makes a drop and then potentially still goes up. But if we lose the mid-range and we lose these lows, then we're in complete bear market and